Hello students. In our previous class, we have learned what is auditing, their functions, their features. In this class, we will learn the different types of auditing, which is included in the second unit of your syllabus in BCM 601, the paper name, auditing practice, and corporate governance. So let's begin. According to the business organizations forms, mainly there are 5 kinds of audits. The audit of the sole trader, the audit of partnership firm, the audit of a joint stock company, the audit of a trust, and the audit of cooperative societies. Now start with the audit of a sole trading business. Now for a sole trading business, audit is not a legal obligation. A sole trader can get his account audited with a view to keep regular and correct accounts, nothing else. Since there is no legal obligation, but it is advisable for every sole trader or for a sole businessman to get audit done, which is an agreement will be drawn with the auditor when he will do the audit. For a partnership firm, according to the Partnership Act, there is no legal obligation. For getting advantages of audit, they get their account audited. If their account is audited, they can get the loan, they can get the borrowings, and they can attract the other shareholders. An auditor should first examine the partnership deed where all the rules and regulations and the formalities are written and the various matters covered in the deed. The audit of a joint stock company is very important. Under the provisions of the Indian Companies Act 1956, it is compulsory for a company to get the audit done. The company's account contains the various provisions dealing with appointment, reappointment, termination, the remuneration, the rights and liabilities of an auditor. Because the shareholders are the owners of the company, it is their obligation or at any point of time, according to the Right to Information Act, they want to see or they want to verify or they want to check the final auditor's report. If it is a trust company, it is often created for the benefit of some religious or charitable institutions. The trust money fund may not be used for whom it is meant, and also the beneficiaries don't have any concern or idea about the account of the trust, though it meant for them. So, just for this reason, the audit of a trust company or a trust organization is very much important. An auditor and also the trust deed is included. If it is for a cooperative society, it is generally done by the registrar and they keep panel of qualified auditors who at any point of time get the audit done for the cooperative society under the Cooperative Society Act. From the legal point of view, actually there are 2 kinds of audit. The statutory audit, which is compulsory in nature, and the voluntary audit, which is private in nature. The compulsory or the statutory audit is a certain type of undertakings established under some law, which includes the company audit, the audit of trust, the audit of institutions, the government audit, and the compulsory audit for a businessman whose turnover is more than equal to 40 lakhs or for a professional whose turnover or revenue is greater than equal to 10 lakhs. If it is a voluntary audit or a private audit, it is for the private concerns which are not established by any statute. The examples are sole proprietors, the partnership, or any institutional partnership professions like doctors, engineers, solicitors, chartered accountants, cost accountants, etc. On the basis of time, the audit is divided into 2 parts: the interim audit, which is also known the internal audit, and the annual audit. An interim audit in big businesses accounts are audited throughout the year. It is a continuous process. But for a small business firm, because of the cost factor, it is audited once only. When an audit is conducted between two periodical audits for some interim purpose, like declaring interim dividend terms as interim audit. Generally, an audit of account of first 6 months of the financial year. It is time saving in nature, advisable to declare interim dividend, moral check, and useful at the time of sale of the business. If it is a final audit, which is taken up at the end of the financial year when the final account has been prepared, the auditor attends only once at the end of the year and complete the work at a stretch in the continuous session. It normally takes 2 weeks to 3 weeks to complete a final audit. Such type of audits is done only once in a year. An auditor and his staff visit at the end of the year. Such audit completed on continuous sitting, and it has some different reports like qualified opinion, unqualified opinion, disclaimer of opinion, or advices, which we will learn in the later part. On the basis of scope, mainly there are three kinds of audit: the interim audit, the external audit, and the branch audit. The internal audit in large company in order to detect and prevent frauds and errors. Remember one thing, for an internal control system, internal audit is a very important part. It is a continuous audit which is carried out by paid employees of the company. Means a chartered accountant or a professional who is appointed by the company, means who is employee of the company, I'm sorry, will do the internal audit along with the chief financial officer and the senior accountants. Some undertaking appoint auditors for constant and regular checking of account. Such arrangement is known as internal audit. It is an independent appraisal of activity within an organization for review of operations by measuring and evaluating the effectiveness of other control. A separate department is maintained for internal audit in big organizations, which is also known as the IDA or the Internal Audit Department. Salaried auditors or sometimes may be the full staff appointed to do so. For an external audit, when a business appoints a professional auditor or a fixed remuneration, the audit is so-called the external audit. The external auditor is required to give his report to the higher authority and to the government, and he is accountable to the client and sometimes to the third parties also for work done by them. Maybe they are the shareholders, maybe they are the government, maybe the loan givers, mainly the borrowers or debtors or creditors, and etc. If it is a branch audit, it is mainly done by the joint stock company. According to Section 228 of the Companies Act, if the branch office is outside India, they will conduct the branch audit. The company's auditor will do the audit, and it will be decided in the general meeting. The person other than the auditor should be appointed by the board of directors. The branch director, their duties, qualifications, responsibilities, remunerations, powers, etc., will also be decided by the board of directors in the AGM or the annual general meeting. From the point of view of the specialty, there are five kinds of audits so far: cost audit, the management or efficiency audit, the proprietary audit, the special audit, and the social audit. The cost audit, which is mainly by the manufacturing business, production, processing, or mining, such undertakings have to maintain their cost account. This will help them to fix up selling price and will also help in reducing the wastage. In India, the first time it was conducted under the Compulsory 1965 cost audit compulsory for the industries. The cost audit is the verification of the correctness of cost account and the adherence to the accounting plan, mainly to the material records, the wage records, and to examine the factory office and selling overhead records. These are some other parts of the cost audit. Now, what is management or efficiency audit? It is a very modern concept, came in the 2000s. Such audit attempts to evaluate the performance of various management processes and functions. It is an audit to examine, review, and appraise the various policies, actions of the management of the basis of the certain objective standards. It is mainly an integral part of the human resource accounting, where mainly the performance appraisal, the evaluations are taken place. Proprietary audit refers to an audit in which the various actions and decisions are examined to find out whether they are public interest and whether they meet the standard of the conduct. While undertaking a proprietary audit, the auditor does not merely evaluate the evidence supporting transaction. He actually attempts to examine the regularity, prudence, and impact of the various actions and decisions. There may be some special audit, which is done by some special reasons. There may be some frauds or some errors, or there may be some investigation going. So, depending on the situation, there may be special audit. Only central government is empowered to order for it, and any chartered accountant or company's auditor may be appointed as a special auditor. The report of the special audit is required to be made to the central government, not to be members of the company. The expense determined by the central government but paid by the company. Have you remembered the Satyam case? In that case, the central government appointed 13 chartered accountants with a board of panel, and they have done the special audit. And what they have done, we all know. Social audit is nowadays a very important part. It provides the protection of the customers, the employees, and all those that are affected by the decisions of the company. Now, nowadays, according to the amendment of the Companies Act 2013, every company whose turnover is more than 1 crore has to submit a CSR report. So the CSR report is properly maintained in the social audit. It is concerned with the checking effects of the company's activities on the people, on environment, and on business relations of the company. It includes the proprietary credit also. On the basis of continuity of the time, there are continuous audit, the complete audit, the partial audit, and the auditing in depth. A continuous audit is one in which the auditor visits his client's office in a regular intervals throughout the year to verify the account. Here, the objective are to get the final account audited when the business is very large and when internal control system is also not effective. So, for a continuous audit, the internal auditor plays a vital role. Here are some advantages and disadvantages of continuous audit. It is detailed, it can detect the fraud, it's a moral check, it helps in the preparation of final accounts, the interim accounts, the technical details, the accuracy. But it takes more time, it takes more manpowers, it's expensive in nature, and it depends on the audit staff. So there is a possibility of manual error is still there. Here are some precautions to be taken for the continuous audit. Look at the first point. He should record important balances, totals, etc., and verify the same in his next visit. But if its organization is very big, it is not possible for an internal auditor to check all the records. So somewhere, somehow, he has to depend on the internal auditor. So the possibility of manual error is always there. It is always better to verify the nominal account at the end of the year, and an exhaustive audit program must be prepared. He should ensure that normal working is not affected, and as far as possible, he should pay surprise visits. What is a complete audit? It implies the audit of each and every transaction entered. The auditor will check all the transactions in every book of accounts. It includes checking, posting, casting, balancing, all the ledgers of the vouchers of the invoices, everything will get checked. It's an audit done where account have not been previously audited. If it is a partial audit, sometimes the audit need to be asked to conduct audit of only some records or books for a part of the whole year. Now, if there is any error or any fraud, we will do the partial audit for to detect only those errors and frauds. If it is an audit in depth, this implies that if your transactions are selected at random and they are thoroughly checked throughout the stage from origin to the conclusions. It means from journal to the balance sheet. It includes not only examining the documents but also to verify the system of the internal check in operation. There are some different stages. Audit program plays a vital role. What is the audit program and how it will work? We will learn in the next class. Now, these are the important documents for the auditor. Hope you have understand. Hope you have enjoyed. Thank you.